Welcome back to the Eric Around Crypto channel. Wishing you a happy and healthy start to this nice sunny Monday morning over here from Dubai. Once again, just checked the internet speeds, and it's safe to say no live streams for the time being while we will be here. It is certainly not ideal. However, I do see that the majority of the community is actually very much in alignment with these more shorter style of videos. So that's what I'm going to be focusing this one on today. I want to speak about the most important things to be aware of that happened with this new weekly closure that we have, what it means for the next few weeks to come. And before we get into that, I have a major announcement as the premium features for the Crown trading application are now officially live. And what does that mean? Well, that means a whole hell of a lot of things. So first and foremost, I do want to let people know who have been asking, for all of the premium users, the customization features on the main page, or any page for that matter, will now follow and save essentially. So if you want to resize this pane right here, for example, you can do that. It's going to save. It's going to save the order that you want to, whip them around in. So if you want to put Bitcoin dominance right there, or funny rates right there, whatever it might be, or just add completely other different charts on the dashboard for yourself, whatever is most relevant to your particular style, you can certainly do that. It will save it for you, and there you go. I want to make sure that I hit all my notes over here, so let me just reference this rather quickly as I do get through it. Of course, that does mean that premium features include the hourly data feed as well, of which that is going to be very much relevant for today's analysis, especially when looking at the funny rates right now, as we do see it negative. We actually see negative funny rates after a nice, like 20% move off the lows, I believe. Sorry, a little bit more than 20% move off the lows. In fact, I'll have to measure that out later once we get into the charts. But, well, I think that kind of speaks for itself. And most importantly, we have been seeing that negative on the daily feed here for, almost 3 weeks straight. And now, trending up here, but ultimately, that does have a lot of solidity with the analysis that we're going to follow up on the charts soon enough. But I want to get through this first. Also, the coin page is going to be showing the top 500 instead of top 100, so you get 5x extra more. And the portfolio will be unlimited for non-premium. You'll get a maximum of 5 assets. It does cost us quite a fair bit to follow up on that, so we did have to have a little bit of a limitation there with 25 transactions on the top 100 coins. And of course, premium will get the full 500 top coins, and portfolio is cloud saved actually as well. So that means for users available anywhere that you log in, well, it's going to be there for you. Also, the newsletter is going to be available for premium users, and of course, the Jewel Light as well, of which I've been getting a lot of questions about. So it's no longer available on TradingView in the public library. Okay, cool. All right, so just want to make sure that I got everything right there. All right, we are good on that. I'm actually going to swing back around to the Crown trading application a little bit later. What I want to get into right now is I want to start off with the most important things to be aware of on price action specifically that happened in the last 24 hours with the advent of this new weekly closure. So let's actually start it off over here on the weekly stochastic momentum that we've been following up on for a while now. And it's now had a full correction all the way down to the, below the bearish critical zone right here. And even bouncing from the same area that we've seen some pretty significant bounces in the past. I'm actually referencing CME data right here. So you can see that the last time we got into this region was, of course, in July of the summer. That was at your $30,000 lows before the ultimate bear trap that we did see, bringing Bitcoin up to its current all-time highs at about $69,000. Anyways, while this technically has actually not crossed the upside just yet, you will notice, or you'll very likely notice, that it will officially cross the upside at the end of this week, Friday, on closure for CME, with any sort of a closure above $36,000, which is rather important, let's say. So I did think that was kind of going to be the star of the show, the chart of the day, if you will. And this is coming alongside a full-on reset on the ADX here. So if you see this dotted line in the background, that represents the advanced decline. And of course, that is, it's kind of like a volatility metric as well. And when you see that fully reset alongside a shift in momentum, well, those are typically incredibly strong signals. For example, the last time we saw it, realistically set up for something similar like this was actually back on over. In fact, we don't really have an example here on this chart because it doesn't go too far back. But basically, if we were to go over to spot price action, I'm sure that we will. Oh, yes, indeed we do. Yes, indeed we do. And that would be, of course, coming in from here in February of 2019. 2019 February was right here at about 3,700 before going to to $14,000 a few months later. So it does take a long time for it to play out, but something worth preparing for if we do get that follow through specifically. So I really need to. It's imperative to see that closure specifically above $36,000. If that does happen by end of week Friday, then that would be the next sort of piece of the puzzle, if you will, for looking for continuation on this rally to some of the more deep targets, actually, of which we'll cover up soon enough. Anyways, moving on, going into this chart over here, we have several things actually going on right now. We do see that weekly RSI is showing hidden bullish evidence. Bit of a phantom drive right here, but ultimately we have found that these have a pretty damn good hit rate. Not as high as regular drives, to be fair, or sorry, regular drives of regular hidden bullish evidence in this case, but still does have a pretty high hit rate, and I do look at this as relevant. However, I do not look at this as confirmed, to be quite honest with you. I would look at this as confirmed with a weekly closure above about 43, what is this area right here? $43,000, yeah, $43,000. Anywhere above there on a weekly closure, then yes, I would be looking for that to be fully confirmed, and this actually will have a technical target on it as well. The first target would be just below $47,000, in line with the 21 right there, and the full-on target would actually be at about $52,000. Now, with these drives of phantom div, I do find that it is more relevant to target the lesser of those two. It has a lower hit rate with the more impressive of those targets, if you will. So I do think that that is worth talking about right now. And of course, there is a failure component on this as well, but for right now, looking good in the hood. On top of that, if we go over here into the 5-day jewel, you will see, and actually still have the jewel light running on over here. I'm actually going to switch back over to the full-on jewel just because, well, I mean, it is better. But the jewel light right here, getting the job done, and we do see that the 5 day is actually getting its first cyan signal. Its first cyan signal coming off of basically a test of to the critical zone here. First time basically since, December 2018. Of course, it was a little bit lower around this region, as you can see. I mean, that was the lowest, really, realistically, that we've really seen it in like the last few years, but that was the last macro cycle low. So I do think that that does have some weight to it, if you will. And of course, that would have a bit of a targeted region as well, somewhere around our $45,000 region, which is in line with a few other things that we're going to follow up on soon enough. Anyways, let me just reference my notes over here. Let me take a sippy sip of this water because my lips are getting parched for whatever reason. Spending too much time out in the desert there. Okay, there we go. And that combined with the 5-day stochastic momentum signal that we've been following up on for a long time now, I do think is a very potent combination. So remember, the 5-day stochastic momentum signal over here, we've been following this for a long time now. We have noticed that it comes down to this 8.5 read right here, this green horizontal area. It's only happened 4 times in the history of Bitcoin, this being the 5th time right here. And 3 of those 4 past iterations, as denoted by these 3 green vertical lines right here, have been macro cycle lows. Of course, we have this one over here from not December, but October 2011. Yes, it did get retested. Yes, it did take several months before momentum really, started to get going to the upside, but that was ultimately moved from not 200, but 250. That's $2.50 is what I mean to be saying, to an ultimate high of about 1,200. A while later. The next one that was a macro cycle low was January 2015. Again, retested it about 8 months later in August, but that was the low, and never going lower ever again until $20,000 was hit. And of course, it never really went lower after that, but that was your macro cycle high. And then our most recent one was December 2018 right here at 3,100. Still took 3-4 months to get going, and then you get that nice big move up towards $14,000. Even comes back down and tests around it over here in the flu dump, but ultimately that did lead us onwards and upwards towards our current all-time high regions in the deep $60,000 territory. The one time where it didn't work out, of course, is right on over here, this being your October 2014 bull trap. But even on that, on a wick-to-wick basis, we do see a more than 70% move to the upside. On a closing basis, a lot less, obviously, about 20% in this case. Nice little coughs from the old Finnish fairy over there, but still a pretty impressive move. Now, to be fair, I believe on a closing basis, we probably already hit a 20% move right here. Let's just see. Actually, no, we have not. And we also do not have closures here, obviously. So a 20% closing basis would put Bitcoin at around, $44,500 to $45,000, which is one of the more of those shallower, lenient targets that we were looking at earlier. And even 70% from a wick to wick basis would put Bitcoin where? Would put Bitcoin in the mid 50,000s, at around $55,000 to $56,000 actually. So rather pertinent as well. All right, cool. So we've hit all of that. Now, let's see, there were a few other things I wanted to address. So while I did provide a bit of hopium on this 5-day jewel signal right here, turning the cyan color, we do see this, that this is coming within the context of declining volatility right now. Now, of course, this is actually being cooked up, as you can see. You can see that we are kind of, oscillating between these two regions right here. And volatility is essentially contracting into this formation, and we're very likely going to see an explosion outside of it at some point. But I think that this can go on for a while longer, so I wouldn't say that this is guaranteed to be the next resolution from this. But ultimately, even a corrective signal, as we have identified before on the daily, was good enough to get Bitcoin out of its current lows and even get that higher low, that glorious higher low that a lot of people are looking for, myself included. And that signal was then followed by a fresh good signal, which we're actually still within the midst of. So I'm referencing this right here, where we did see that volatility was contracting from January 27th, and the jewel light did get an upside signal. Got a pretty damn good move right there. Then it turned white for a second. Everyone got scared. Volatility at the lows. And we got another fresh upside signal, this time in the context of expanding volatility. So that is a quote unquote good signal. So ultimately, I do look for that one to trade higher. In the short-term timeframes, could we see a bit of an ebb and flow here? Yes, absolutely. I was actually looking for that. If you watched yesterday's video, within the last, or basically like today or tomorrow, something like that. I still think that is very much relevant or possible, but I'm not too fussed with the lower term timeframes right now, and I do look at this as a rather big range. So if I am looking at the lower term timeframes, if you put a gun in my head and said, "Crown, trade 'em or die," I'd say, "Sir, I'm on vacation. Please let me be." But here's what I do right here. I would say, as long as Bitcoin's kind of awesome between about what's its current high right now, about 43,000 and about 41,200, our spike low from yesterday. That's irrelevant for the short-term timeframes. Anything between there is, it doesn't really mean a range resolution or not. But if we do start to see even an hourly closure below about 41,200 in this case, I would be looking for that pullback in line somewhere around CME gap from last Friday closure. That's in your mid to low $40,000 territory right here. I mean, Bitcoin could even play down to $39,000 in my opinion and still be long-term in a good posturing here for more continuation to the upside. So ultimately, I would just be looking at these as ranges, and each range resolution leads to a test of the next range, low or high. In this case, below about 41,200. I look for that next move to about low 40s. That's like 40,150 or so. Or sorry, it's more like, apologies on that. It's more like 40,350 in this case. An hourly closure below there, I do look for another $1,000 dump down to about 39,250 to 39,300 or so. Also can be in line with the 200 symbol right there as well. Still possible, yes, but obviously the longer that Bitcoin kind of stays up at the highs, it becomes less and less probable here. Anyways, okay, let's see. So we've spoken about that. This would actually be a good time to speak about invalidation, of course. Invalidation, always important, as I make sure that I can see if I'm actually recording, and I am, so that's good. It's really, really good to do when you're already like 10 minutes into your video. But where would invalidation be on your medium and higher term timeframe bullishness right now, as seen as we just spoke about the lower term timeframes? Would be very obvious in this case. Any sort of a daily closure at all whatsoever below $40,000 especially would be considered, well, that would be considered a bull trap right here. I'm not saying that that's going to happen. In fact, I don't think that that's going to happen, but as always, it needs to be some sort of tangible invalidation for a setup in this case. And seeing as we are, testing the green 55 in this case, very likely going to see a pullback from that region on your first go after a while from being away from it. I mean, the last time that Bitcoin tested it was way back on over here in late December. So that does need to be stated as always. And now let's get into what would be confluent with those next targets to the upside, because there's a few things here. So if I throw on my fibs, and giving away my cards yet again. Apologies on that. Okay, let's get rid of that. Let's get rid of that. Let's get rid of that, and let's get rid of that. And let me get rid of this right now as well. You will notice that the $45,000 region is kind of about where I'm looking for the next major pullback in this case on a daily, somewhere right around there. Anywhere essentially between the last sort of high that we saw in early January at about $44,000 to potentially as high as about $45,000. And then I would be looking for that pullback. The question is, does that pullback lead into a higher low after that? If it does, very likely looking for the next drive to bring Bitcoin above $45,000 and test somewhere between, basically $48,000 to $50,000, which would be in line with the 618 Fibonacci retracement right here as well. Again, these are bearish retracements, however, so do understand that if Bitcoin were to do something like this, so let's say we do something like that, boom, scare the shit out of everyone, then pop in right here and show some weakness, that would, that's actually rather likely. We very likely do expect a turn down from regions like this. This is still, I don't know, maybe like a week or two, maybe even 3 weeks away, something like that. Doesn't really matter on the timing really, but I just want to say that it's in the future, not necessarily right now, and not relevant, more importantly, as long as Bitcoin's below, that $44,500 level on a daily closure, let's say, or 45,300 on a wick basis. Anyways, after that, I would be looking for a pullback. The question is, does Bitcoin come back down specifically below that $40,000 region right here and close it daily? If it does, very bad, very bad. Very likely looking for another run at the lows, that being into the mid and low $30,000 territory, perhaps even down to the macro lows here of the range, in this case about $29,000 to $31,000. However, if you do see a low like this and then Bitcoin pops back up and then specifically takes back out this $50,000 region right here on a daily closing basis, that 618 retracement, then I would be looking for a big move to the upside. That's at the point where I would be looking for the weekly hidden bullish divergence RSI move to play out, the full move that is, which would be a target region into the mid $50,000 territory. And then at that point, I'd probably be looking at Bitcoin as just macro bullish again, like ready to trend, let's say, over a long enough time period, perhaps, still a few months down the road. Like this is not happening today or tomorrow, for example, or very unlikely, I should say, you never know. But ultimately that's kind of the major pivots that I'd be looking at. So what's less important than timing these sorts of moves is the pivots that they're kind of sprung upon, because that's something that is a lot more tangible to be managing off of, at least in my opinion. Anyways, in that case, we also see this over here. I thought that this was rather interesting. So what chart do I have this on? Was it this chart? Was it this chart? I think it was this chart actually. Yeah, we do actually have a bit of a falling channel going on over the last, how long is this? This is like a 2.5 month long falling channel, which is kind of crazy. So it does hold some significance here. And that actually does have a technical target as well. That would be at about the $50,000 level, which again would be in line with the 618 Fibonacci retracement. Again, that is a bearish retracement right there. So we would expect, a turn down. The question is, after that turn down, does Bitcoin put in a higher low or not? If it doesn't, big problems, big problems. Again, probably not happening anytime soon. If it does, and then specifically pops back up above 50,000, we start to talk about big moves up into the, deep $50,000 territory. So that is kind of the way that I'm looking at price action right now. If you want to go back into the lower term timeframes, which again I've kind of been avoiding on this particular video, just because I'm busy drawing with my red brush, but just because I think that the higher term timeframes are much more important right here for general structure, as we've seen a higher term timeframe move. Like I said, I do still think that there's a potential for that move back down to fulfill the CME gap from Friday. We do see full hour stochastic momentum getting way up there right now. 40,750 is the magical number to keep it to the upside. So it's still above there, to be fair. 6 hour is, I'm sure, still up as well. Yeah, it's still vertical above 38,450, and buy hourly is showing what is showing turning down below 42,800, and hourly is going to be It's going to be loading. Yeah, there we go. It's coming down below 42,950. So very, very short-term timeframes are a bit more corrective right here. That doesn't necessarily imply a range resolution in this case. The most important area, in my opinion, would be about that 41,200-ish region below there. That's where I do start to look for, decent moves to the downside. In this case, about another $1,000 down to about 40,002 to 40,003. Then below there on an hourly closure, I do look for that nice drop down to about 39-ish, just above 39 in that case. That'd probably be good enough to wash a lot of people out of this market and continue to provide some more liquidity for the move upwards as people pile in on short. And again, I want to reference this data right here on the global open interest, kind of speaking towards the health of this rally, let's say. So you can see that we're already at around just under 12 billion with the B. Let's go to the hourly data feed. Yeah, it's actually just under 12 billion on the hourly. So this is more relevant data right here. So while 12 billion isn't like a historically concerning area, 13.5 to 14 billion is. And I would say even above 13 billion, warning signals are going to start to pop up a bit. So my fear is that, or, my fear for the boo laws is, because at the end of the day, I'm a trader, I shouldn't really care about direction. But my fear for the boo laws is that you see something like this with a lower high below about $44,000 to $45,000 alongside a global open interest read that does get above, 13.5 to 14 billion. If we start to see local highs within that, that would be a bit of a concerning thing to see because all of those reads in the past year have been met with a 20 to 25% downside move at minimum, and at most a 50% downside move. So I would say, just something to keep your eye on. Because I don't want to go like full on bullish here, don't want to get full on bearish. Look, should really just be looking at the market in terms of pivots and kind of ignore the hilarious clout seeking of the social media sphere, let's say, put it diplomatically. That is basically to say, look, I'm not trying to like be fucking, oh, it's off to 100,000 again, or no, it's down to 10, it's down to 15,000. Equally, both are just equally silly at this point. They're both equally as irrelevant as each other. For somebody who's thinking within like the next few months even, or especially like the next I don't know. Well, whatever. Let's just get off that conversation before I say something else. Anyways, the funny rates. I wanted to come back here too. You can see that it's negative 0%. No, that's a rounding error, of course. But if we do go into the hourly data feed, it actually is slightly negative. So again, we see consistently negative rates as Bitcoin has put in a pretty big rally in this region. That does support more upside continuation overall. And generally speaking, I do think that Bitcoin will be trading, somewhere to about $45,000 or so before thinking about 40,000 or 39, whatever it is. I might even extend that to $50,000 in this case. Even though the short-term timeframes could very easily have a short-term correction right here. So I want to really differentiate these timeframes. Anyways, I think that's a good place for me to let this one go. Yeah, I think that's a good place for me to let this one go. If I had to call it right now, short, medium-term timeframes is probably going to be a bit more corrective, similar to what I said yesterday. But ultimately, I do think that Bitcoin pushes on through here, and the next week is going to be this like next week of price action, and the week after that are going to be the ones to really be watching for the next sort of iterations of these signals. Anyways, with that said, I want to wish you well yet again. Take care, and I'll see you in the next one.